Anthony, nice day, big pop, not too big, not too small. Curious how you're feeling at the moment about the decision to go public via SPAC when it seems like the SPAC honeymoon is kind of waning, whereas the traditional IPO window is wide open.
You know, history has shown there's a number of different ways to go public. There's three primary ways: a direct listing, now with a primary offering, a regular way IPO, and then a SPAC merger IPO. The SPAC merger IPO was the right choice for us. I was an investment banker. I led Goldman Sachs TMT banking for a number of years. I was a research analyst covering the internet and media sector from '99 through 2007. So I've seen dozens and dozens of IPOs, and every company has different facts and circumstances. And as related to SoFi, we had a couple of unique things we had to solve for. One, a large percentage of our capitalization was preferred shares instead of common, and that needed to change, both to be a licensed national bank in the United States, also to be a public company. We also had to raise capital, which we were working on privately to pay off a seller's note for the acquisition of Galileo in March of 2020. And then we wanted to capitalize the company for the long term as part of our bank application process. We were raising money privately, and along the way, our business continued to really accelerate in the fall and into the holiday season. And we were very in a great position to have a lot of options. So we decided to really execute three legs of a stool. One was a private investment from T. Rowe Price at $75 million of an investment that we closed on about December 27th. We then launched the PIPE from December 28th to the 31st, and we raised a considerable amount of financing in that regard, and then announced the SPAC on or about January 4th. And in total, raised $2.4 billion, converted our preferred to common, paid off the note to Galileo, and capitalized the company for the foreseeable future, both if we get a national bank license, which is our goal, as well as funding our business into the future. So a really great outcome for our shareholders, our team, and our partners, and I couldn't be happier with where we are today.
Now, SoFi is helping to empower a new generation of retail traders, taking stocks like GameStop and AMC to high highs and low lows. Do you have any hope that retail traders might pick up on SoFi itself, or do you prefer to steer clear of the potential volatility that could involve?
Well, I would first say that we focus on giving access to investing to SoFi members, and we want them to be long-term investors. We want them to consider all of the investments that they make, ensure that they're suitable for themselves, and they take a broad-based, diversified portfolio approach and invest for the long term. When you say the word retail trader, you know, in the back of my mind, I instantly think day trader. And we're very fortunate in that less than 1% of our brokerage accounts have more than 3 trades in a day. And so we're trying to educate our investors on using recurring investments, which is a feature and functionality we've enabled on a number of stocks for it to be automatically invested in those stocks. We also have robo accounts, which is another way to drive diversification. And we've introduced 5 SoFi ETFs, which are a low-cost way in terms of dollar per share, but against a diversified portfolio of stocks against a specific theme, like the gig economy. We have the SoFi Gig Economy ETF and others. As it relates to the retail trader mentality that's talked about on television quite often, you know, I do think it's really important in this world in which we have a significant sector acceleration in people accessing public markets, that they do in an educated way. And it's a responsibility of all the brokers to ensure that the assets that are being bought and the way they're being bought is suitable for that investor base.
On that note, Anthony, is there anything that concerns you about the current day trader rally that we're seeing in the markets, especially at these levels?
I really don't try to take a perspective on the markets. We're in the business of providing our members with products that help them get their money right. We're doing that in our Invest product, and we're doing that more broadly, whether it's reducing their cost of debt, giving them access to unique investments like IPO investing on the platform, or the SoFi branded ETFs that we created, or robo accounts that we created. That's what our responsibility is. And we do provide education as it relates to the volatility of markets and what we're seeing, but we're not taking a position on the market.
So you recently said that your clients are asking for crypto more than most other things. I would love to know the numbers. How many people are trading crypto on SoFi right now, and how much has that grown?
Yeah, first to your first point, when I first arrived in 2018, I had a view that we need to offer a broad selection of products in our SoFi Invest offering, and that there was an opportunity to differentiate by offering a broader set of products, one of which is cryptocurrency. So we offer single stocks without commissions. We pioneered fractional shares. I mentioned ETFs, robo accounts, and cryptocurrency. When we surveyed our members to see what they wanted, in the top three was cryptocurrency, and we do provide that. And we provide a very clear warning every time they enter an order that cryptocurrency is highly volatile, it's unproven, and you could lose all of your money. We haven't disclosed the specific percentage of our invest members that are buying crypto, but it is one of the fast growing areas within our invest product. And we're also seeing growth in brokerage very strongly and fractional shares.
Now, SoFi offers an alternative to apps like Robinhood, and Robinhood also offers crypto trading services as well. And I'm curious, with Robinhood planning to go public, we believe in the next few weeks, what do you think SoFi has on Robinhood?
Well, I'd say generally we're competing against the traditional banks. There's 500 million accounts that are still attached to legacy FDIC banks that don't provide a comprehensive suite of products. We're a one-stop shop. We're offering lending products, investing products, savings and spending products, and protecting insurance products on one mobile platform. So you can do it all with us. Even within Invest, we're the only place that you can buy single stocks, fractional shares, ETFs, robo, and cryptocurrency. If you wanted to buy 3 of those 5 products at a time, and you didn't do it on SoFi, you'd have to use 2 other apps. You can do it all on SoFi. Not to mention, if you use our SoFi Money account, you can put your direct deposit into SoFi Money, you earn interest on that money. It easily transfers directly into your Invest account with you doing virtually nothing. Just when you want to buy a stock, the funds get moved over. So it's sitting in your checking account or your vaults, and it's seamless. We're trying to make our products broadly appealing, but also make them better when they're used together. SoFi Money and SoFi Invest is a perfect example of that. And increasingly, you'll see that with our other products. When we launched SoFi Credit Card, we double your rewards on your credit card when you redeem into SoFi Invest, into fractional shares or cryptocurrency.
Anthony,
we want to show the value of 1 + 1 is more than 2.
Anthony, I'm curious about credit products a little bit. Just a week ago, we saw Elizabeth Warren really drill into the bank CEOs for overdraft fees. I'm wondering if you think lawmakers have a reason to be concerned when it comes to the banking system and the fees that consumers face when they're charged among typical banks, the contender banks.
I absolutely think the lawmakers should focus on those fees. We do not charge for overdraft fees. Overdraft, we have free overdraft protection on our SoFi Money account. We also provide high interest on our SoFi Money account, regardless of where you put your money. We think you should get the same interest rate on all of your cash. Why should you have to put it in an X account versus Y account? The industry is using legacy frameworks and legacy approaches to modern day. Digital provides an infinite permutation of the products we can create, but somehow banks are still open from 9 to 5. Somehow trading is only 8 hours a day, Monday to Friday. Cryptocurrency is 24/7. Why isn't all trading 24/7? Why am I getting charged fees because I go a little bit over my account when I have direct deposit with you and you know the money's coming in? Why is my money not available as soon as you get access to it? We just enabled 2-day early paycheck on SoFi Money if you do direct deposit with us. Why? Because it's available 2 days early. So why shouldn't we make it available to you? We have to put our members' interest first, not our interest. If we take care of their interest, they'll take care of our interest. It's a simple axiom. It's proved to really serve companies over time. And so the lawmakers should focus on fees and ask these tough questions.
Anthony, you're in partnership with Chamath Palihapitiya, and I'm curious how valuable that partnership has been to you. You know, we know that if you look over the longer term, some of Chamath's deals are underperforming the market. How much advice is he giving you on a daily basis, and how helpful has that been?
Chamath has been a phenomenal partner, as has Social Capital. They raised a SPAC which had $805 million. We were looking to finance our company through the private markets, and along the way, we were offered opportunities to combine that with merging into a public company. Chamath's team provides us strategic opportunities that are beyond the SPAC. We have a very similar interest. His company's called Social Capital. Our company's called Social Finance. So there'll be things that we can do strategically well beyond the SPAC. That was an important element to the relationship. The second important element to the relationship is we knew they had a robust team that could do the level of diligence that's required to provide credibility to the PIPE investors to credentialize us with them as they were recommending SoFi to those PIPE investors. We had gone through that process with T. Rowe Price, which was also credentializing. Chamath and his team doing that was an additional element of credibility with those PIPE investors. And that diligence process was quite thorough, and frankly more thorough than an IPO, because not only were the underwriters doing the diligence, his team and the vast network of capabilities he had and he brought to the table was part of that to make sure we're ready to be a public company. And then third, he's done 5 SPACs. He's executed 5 SPACs successfully through the de-SPACing process. I'm not talking about valuation or what the shareholder base is, but the process of giving us an opportunity to merge with a public SPAC, to have that capital on our balance sheet and do that successfully was an important element. We are a consumer brand, and ensuring that we had deal certainty was very important. So a great partner now is going to be a great shareholder.